The taxes on buying and selling silver in the UK are frequently misunderstood. It is true that most silver coin and bar purchases are subject to VAT sales tax. It is also true that your sales of silver coins and bars are liable for capital gains tax. Silver sounds like a bad investment, right? But it's also true that most educated stackers do not pay either tax on the majority of their silver, and I'll explain how in this video. Hello everyone, and welcome back to Sound Money Stacking. I've noticed the same questions and comments appearing from new or confused investors and savers about the tax laws that affect buying and selling silver in the UK. So I've decided to make this video to clarify frequent misunderstandings. Please note that this video includes my own personal observations at the time of publication. I'm not offering financial or investment advice. Please consult a licensed tax accountant when managing your investments and savings. Let's get started. Sales tax. The sales tax, VAT, is due on many goods, which currently stands at 20%. All new silver bullion products, whether they are coins or bars, made by the Royal Mint, private mints or overseas mints, are all subject to VAT. It is important to take this into account to be able to maximise the gains from your investment portfolio. Gold is not subject to VAT, which is a major reason why many investors and savers always choose gold over silver. However, you can buy pre-owned silver without incurring VAT. That is because second-hand goods are eligible for VAT exemption to prevent VAT being charged more than once on the same item. Peer-to-peer private sales do not incur any VAT. There is a small VAT charge for dealers and small traders. This is called the special scheme or margin scheme. Same thing. When a VAT registered trader buys and sells second-hand goods, which would normally be taxable, they're entitled to account for VAT only on the gross profit. The VAT due on pre-owned silver coins and bars is almost negligible. For example, if a trader buys a second-hand silver bar for £100 and sells it for £110, that £10 markup actually includes something like £1.67 of VAT, assuming the VAT rate is still 20%. Traders are not permitted to issue a VAT invoice showing this VAT element, and the buyer cannot reclaim it. Now you know this, you might decide to buy most of your silver stack from the pre-owned market, as you will accrue many more ounces for your hard-earned flimsy pounds. You will still need to pay VAT on new items of silver if you're keen to continue collecting dated coins or bars in a series and you want to add the latest issue, for example. Note that some independent dealers, which I've described in video number 8, can supply newly issued coins and bars under the special scheme as they were pre-owned by another trading party. Many stackers in the UK, including myself, mostly buy pre-owned silver for the best value and for the tax efficiency. Capital gains tax. Okay, so now you know how to buy silver in the most tax efficient way. What about selling without having to cough up a big tax bill? Capital gains tax is a tax on the profit when you sell or dispose of something, an asset, that's increased in value. Chargeable assets that are subject to capital gains tax include personal possessions, which includes bullion and collectibles, property other than your main home, stocks and shares, and business assets, for example. However, there are 3 important exceptions which mean that you may not be liable for any capital gains tax when you sell your bullion. Exception 1. Sales under £6,000 are exempt from capital gains tax. Only personal possessions over £6,000 in any one transaction are subject to capital gains tax. This includes gold and silver bullion. Breaking up one sale to one party into multiple payments will probably trigger an HMRC query, so don't try that. Exception 2. UK legal tender Royal Mint coins are exempt from capital gains tax. If you anticipate selling more than £6,000 of bullion at a time, i.e. it's your deep stack savings, you should strongly consider buying bullion coins that have been produced by the Royal Mint. Bullion coins from the Royal Mint are exempt from capital gains tax for UK residents due to their status as legal British currency. These include not just Britannias, but also collectibles like the Queens and Tudor Beasts, the Royal Arms, proof coins, 50p's, and so on. And this also includes silver, gold, and platinum. Investment bullion bars made by the Royal Mint are subject to capital gains tax, as they are not legal tender. I've talked before about a deep stack, which is your long-term investment, like a pension, a liquid stack, which is your short-term store of rainy day funds that might replace a savings account in a bank, and collectible bullion, the fun stuff. My deep stack is comprised entirely of the cheapest Royal Mint coins that I could find. My liquid stack probably also has quite a lot of Royal Mint coins for a similar reason. Stacking big bars or boxes of overseas coins is just not tax efficient for UK residents. Exception 3. Your personal allowance may cover all or most of your capital gains tax obligations. As of the time of recording in January 2026, each adult in the UK has a personal capital gains tax allowance of £3,000 each. Married couples can share their allowances. You may also be able to reduce your tax bill by deducting losses or claiming reliefs on capital gains tax. Summary. How to be tax efficient with your bullion investments in the UK. When you buy, remember that all investment gold is VAT free, and pre-owned silver is also VAT free. When you come to sell, sales under £6,000 at a time are exempt from capital gains tax. All UK legal tender Royal Mint coins are exempt from capital gains tax, and your personal allowance may cover all or most of your capital gains tax obligations in any 1 year. So my takeaway messages for you today are that 1. You should consider buying pre-owned silver. Stackers will benefit by breaking the habit of always buying new silver from their favourite bullion dealer. See my video number 8 for how to save money when buying silver. 2. Focus on capital gains tax exempt silver coins for your investment stack. Focus on buying capital gains tax exempt Royal Mint coins when buying for your long-term investments. These do not need to be Britannias, they don't need to be pretty, they don't need to be desirable or collectible. Go for the cheapest ounces that you can find at the time. Maybe avoid buying too many of large-sized pieces. 3. There is room for fun silver in your investments. There is plenty of room in the regulations for you to be able to enjoy collectible bullion, numismatics, and poured art pieces from around the world without worrying about the tax implications. 4. Keep excellent records. Keep a record of your purchase and sales receipts for tax and insurance purposes. Maybe take photos for insurance purposes too. I keep a log of all my bullion purchases in an Excel spreadsheet to help me track my collection targets and also calculate the current estimated value and the insurance implications of that. It's interesting to look back and see what we paid for items in this rapidly changing precious metals market. Well, that's it for this video. Give me a like to tell YouTube that you found this information helpful, and perhaps save this video in case you need to refer to it again later on. I'm interested to hear what you are stacking, so let me know in the comments. It's fascinating to see how everyone has very different stacking strategies. Thank you for watching, Happy New Year, and see you in the next video.